Hey guys, welcome to the Blockchain Bandits podcast episode 14, I think. 14. Yeah, I think it's 14. If not, then I'm just wrong. But yeah, 14. You're here with me, Jeff.
And me, Andy.
And no Courtney this week because he's pretending to be sick. But he's secretly just, out with girls. You guys might not know this, but Courtney is kind of a player.
Yeah.
He's just every day a different girl, and I was okay with it, but now it's getting in the way of work, and he's pretending to be sick. It's just, yeah.
You know them ones when you live your hedonistic lifestyle, just drinking, and, like bringing out girls, staying out late, and then you wake up late, hungover, and you're like, you know what, boy, I can't do it. I can't do it this week.
Yeah, that's exactly what's going on.
Do you, though, bro? Do you, bro?
Yeah, do you, Courtney? You're a flipping guy. But anyway, this week we'll be speaking about Bitcoin and the market in general, and whether it's actually starting to show signs of a recovery or is it just a dead cat's bounce. We'll also be talking about the credit card cryptocurrency ban. So a lot of banks and institutions have banned the purchase of cryptocurrencies with credit cards, and we'll be discussing that. We'll also be talking about what else will we be talking about?
Governments and regulations.
Oh yeah, governments and regulations. How that's going to affect the cryptocurrency market long term, short term, whatever. And then we'll be talking about Cardano, some red flags that have popped up with Cardano. So yeah, firstly, the market in general, Bitcoin market, how's it doing? How's it looking? Is this actually starting to show signs of recovery? What do you think, Andy?
Well, yeah, again, we were talking about this earlier, and short term, it looked good. However, if you were to ask me long term, I still don't know. It's too soon to say. A lot of people are on the sidelines having a look. In terms of if you look on the daily, it looks quite bullish. But if you look on the weekly, for example, we're looking at a chart right now on the weekly, and it's
looking very vulnerable.
Vulnerable is the right word. Yeah.
I agree. Like, short term definitely looks bullish, but long term overall it's very bearish. Still on a downtrend overall, and there are just some certain key levels that it has to break. But for now, I feel like we'll see some indecision. I've recorded a video that goes in more depth. You guys will see that, I suppose. But yeah, it's just, it needs more. There's more confirmation. Yeah, there's not really any solid signs either way, but as they say, the trend is your friend, and overall the trend is bearish. So you gotta stick with that bearish sort of tone. But this is the markets. It can turn at any point, especially with the cryptocurrency market. So it's hard to tell. And most of the charts are showing those same signs, like Ethereum's they're showing that as well, and other coins. A lot of the popular ones are showing exactly the same signs.
Yeah, it'll be interesting to see if it is a dead cat bounce or not. Which again, for people who don't really know the term, it means basically kind of it hits a point. It's one of its lowest points. It jumps up about 20-30%, and then drops right down again.
Yeah, basically, it gets people thinking, "Oh my god, like price is gonna go back up again," and then you go in there with your buys, and then you just get shorted by the market, and you're just like upset.
Yeah.
But have you ever thought about where the term "dead cat's bounce" comes from? Because that sounds kind of messed up. Like,
Isn't it?
what's going on? Like, who threw a cat out of a window and watched it bounce and was just like,
It's a bit of a weird. It's used like. It says on in the dictionary, it says a temporary recovery in a share price after a substantial fall caused by speculation buying in order to recover their positions. But I don't know who threw a cat out the window, bro. I don't know.
Expected it to bounce back
exactly.
up. Yeah, well, it goes to show you everyone in finance is insane. So yeah, There you go. But yeah, next up, a lot of banks and institutions have ban credit card purchases with cryptocurrency on exchanges. We spoke about this briefly in the chat group. There are a lot of people raised some good points. I kind of understand why banks and institutions would do this, because you shouldn't be allowed to buy something like a speculative asset with credit, because it's not your money, it's their money, and that you're going to owe them if you lose. You owe, and you won't be able to pay them back, and obviously they got to cover their backs. When it's your own money, you need to, obviously it's your responsibility. But someone raised a good point in the group that you can actually still purchase, like you can still gamble with credit. And then someone else raised a good point saying that the gambling industry is actually regulated, unlike the cryptocurrency industry, which is a fair point. But still, if you're thinking about the logical reasons behind it, and which is based on risk, the risk still applies, and maybe even more so with gambling than cryptocurrencies, which is debatable. But what do you think, Andy?
Yeah, I mean, like, it makes complete sense from a bank's point of view. The fact is they're lending out credit, so they're very careful about who they lend their credit out to. And if they know that their customers are using credit to trade in a highly volatile market, again, which we've said from day one. Again, we're not financial advisors, but we said don't be doing that.
Yeah.
It's too crazy. Yeah. So it makes sense that banks want to try stop that. But also we were talking on the phone yesterday about how the reasons why they're doing this. Again, recently a lot of banks have been pushing a lot of FUD in the media. No tinfoil hat thing. It's happening.
Facts,
it's facts. And along with the banning of cryptocurrency purchases using credit cards. By the way, they were telling media to say, "Oh, they're banning Bitcoin, Bitcoin." True, yeah. A bit of FUD, but
also there was a lot of confusion because people thought they wouldn't be able to use their debit cards.
Exactly,
but there's a difference.
The thing is with these headlines, they're ridiculous. Again, FUD. We understand. Like we know what game they're playing.
Exactly.
They've also in the same week raised the interest rate in the Bank of England.
Yep.
So in terms of the UK, again, which are most of our listeners, and again we're British. Yeah. It's the banks are moving very smart, because what they're saying is, okay, like you can't use credit to buy cryptocurrencies, and we're gonna raise our interest rates, and raising Bank of England's interest rate is goes through to commercial banks. They have to.
Yeah.
And that kind of says, you know what? The person who's looking to make some money because they have some saving. Let's say they got 10 grand, and they've heard about how much cryptocurrency and Bitcoin's gone up, and they're like, oh, I missed that. I think I missed that, because it looks too crazy. It's like people are losing money now. Maybe I should just go to the safe option and just put my money in a savings account in the bank because they're raising interest rates.
Yeah, exactly. It makes the banks look more appealing.
Exactly. Yeah. That's what they're doing. That's exactly what they're doing. And I mean that, the thing is, people need to realize that the banks, they weigh up their pros and cons, and they have skilled mathematicians to work out where what kind of where to put what eggs to put in a certain baskets. Yeah. So in my opinion, I thought that this credit banning of crypto, and along with this interest rate rise, was a very calculated move, especially with again, when Bitcoin's falling, when the cryptocurrency is falling, you gotta hit it while it's low.
That's true.
So they find their shot, really.
Yeah, it's a good plan, a solid move. Obviously, we can't confirm whether this is actually facts or whatever. It's just our opinions.
Yeah.
But obviously, this is just business. What you have to deal with your competition somehow. It's a fight. It's a battle. someone's fighting for survival and the other's fighting for survival. So it's just it's war games. It's exciting to watch from the outside, to be honest. To see how it pans out. I'm very interested to see how it works, but I've been very interested to see how people have reacted to this sort of news. People just panicking, going, "Oh my god, does this mean the end?" Because they're looking at prices, and like Andy says, that like they're kicking cryptocurrencies while it's down because it's just easy to do that. You know, people already emotional, people already contemplating selling at a loss. You know, and these things will allow them to sell at a loss, and then guess who's going to be buying these coins and getting money from these coins going into profit. It won't be you because you've just sold out. It would just be the institutions. They're the ones that would buy it out. If you look at the charts at the moment, even the like indices market, you know, just stock market, it's been suffering recently, quite heavily, and this is just how it works sometimes because most of these institutions, their trades are done by algorithms, and because they're all using algorithms, it's algorithms trading against algorithms, and sometimes that causes a bit of a mess, and that has translated onto the cryptocurrency market because the cryptocurrency market is starting to look a bit more algoed out, and so you'll see these sorts of similar movements between the cryptocurrency market and the stock market, and that's what happened. They were both crashing basically at the same time.
I think that's a great point, actually. I think a lot of people who aren't in the whole know about the whole trading and investing. Like, it's crazy how much these black box tradings, not just black box, but a lot of trading is done through algorithms. It's not it is people with their like working out what to buy and invest, but most of it's done through basically a trader saying, okay, buy it if it hits a certain mark. And this is happening in the cryptocurrency market as well. Again, in terms of the whole bank side, they are like, it is very psychological because they know that the sentiment controls markets. So if they can continue doing what they're doing and the sentiment carries on where they want it to, what will happen is sooner or later their marker will be hit and their algorithms will hit what is wanted, what they said they wanted to hit, and they will start buying again. And that is how they make money, and that is how they create their value. Like that, all they want to do is see what is undervalued and buy it and then sell it. That is basically the job of what they do.
That's all it is. Basically, Andy's right. That's all it is. They just try. It's just basic things that we're trying to do. Except for they have the money, they have the power, they have the algorithms.
They have the mathematicians. They have the developers. They have the psychologists as well. Like,
Exactly.
They know what they're doing.
Yeah, exactly. And that's why it's even more important as a retail investor. And a retail investor just means like an everyday person who's not in an institution or professional. As a retail investor, how important it is for you to protect yourself, to risk only what you don't mind losing, you know, to always do your research, to try and find the low point and instead of buying at the top, you know, to detach yourself emotionally from things and stop yourself feeling things like FOMO, fear of missing out, or just fear in general, or greed even. It's just all about, you know, self-control. It's not anything deep, you know. You don't have to, you know, start meditating every day. You just have to have a bit of discipline and, you know, just kind of control yourself and think logically like a machine, like Michael Jr. says all the time. And I've mentioned it before, but it's true. It's always valid when it comes to this stuff.
Yeah. Another question is obviously like it's just Lloyd's Banking Group, which have currently decided to ban. Oh wait, Lloyd's Banking Group and Virgin.
Okay.
They've decided to ban credit purchasing cryptocurrencies. Whether or not other banks do follow suit or not, I mean, it will be interesting to see. we forgot to add that. I mean, you can't buy a lot of like options or futures or like credit. Sorry, you can't buy a lot of options or futures or in terms of just trade in general using credit. You're not allowed to. So in their argument, they're going to say, well, we're stopping people from doing that. We've got to stop cryptocurrencies as well. So again, that's their argument. Fair enough. But yeah, thought I'd add that.
Yeah, no, that's a good point. That's a good point because you kind of have to balance it out because it does make sense. Like we said at the beginning anyway, it does make sense as to why. We're just trying to think about some of the motives, trying to balance it out, see it from both sides. So you guys get as many perspectives as you can.
Yeah.
But yeah, next up, we'll be talking about... yes. We've got through it quite quickly, actually.
No, we got to talk about the whole government and regulations.
Yeah. So yeah, regulations. I think we briefly covered this kind of last time when we were talking about like the utilities and the securities. But yeah, there's
a bit of an update now.
Yeah, a bit of an update now. Things are kind of moving forward with the cryptocurrency regulations. Like we mentioned last time, it's mainly going to affect cryptocurrencies that come under the banner of being a security. In case you don't know what that is, it's basically something like a stock or share, an asset that you hold in hope that it will appreciate in value and then sell for profit, essentially. A utility is basically just a token that you use within a certain decentralized app, and it's only meant for use in there. And the example that tends to be used a lot is like Disney dollars. You go to Disneyland and you get given Disney dollars, and you only use Disney dollars in Disneyland. If you try to go to a restaurant on a date and try to pay with it in Disney dollars, you're going to end up embarrassing yourself. And then pretending you're sick and then not coming in to the podcast. Yeah, shots fired. Anyway. Yeah, have you got anything to say about it?
Yeah, like in terms of the whole regulation things, like there's been an update in it. So Hong Kong are getting a lot of pressure from Beijing to enforce their regulations with certain exchanges and ICOs. Particularly exchanges. So they're basically slamming their hammer on certain exchanges who aren't abiding by particular laws, such as like they don't have a certain license or they violate local security laws in terms of Hong Kong. Because again, Hong Kong's political situation is very interesting, but basically not gonna get into history, but basically they're getting a lot of pressure. So again, like that's just one area which is they're cracking down and they're being hard forcing with their regulations. Another government as well is South Korea. So South Korea they brought in the regulations before. They said that again that got brought out as FUD a few weeks ago. People were saying, South Korea are banning cryptocurrencies and their exchanges, but they're not doing that. They're putting regulations to protect their users who are the people who are trading the cryptocurrencies, because South Korea knows that cryptocurrency brings a lot of money in terms of in revenue in taxes and stuff. Like a lot of when China banned trading and ICOs, a lot of the Chinese traders actually went to South Korea, and they're still there. That's why Korea was top of the charts in a lot of these like the price exchanges in coin market cap.
And that's why when they got removed from the like a lot of the Korean exchanges got removed from the coin market cap average, it had a huge effect on the market as a whole.
Yeah. Exactly. So basically the whole reason why South Korea has been a bit harsh is because South Korea, they like their tax, like any government, and So obviously there's a chance to money launder or tax evade when you go from fiat to crypto currency exchanges, right? That's why I don't know if I'm sure you guys know, for certain exchanges like Coinbase, Kraken, what's another one? Coin Gemini.
Oh yeah, Gemini. Yeah.
That's a good one.
Yeah, yeah.
But yeah, these exchanges, they all ask you, what's your passport? What's your passport details? They want to know who you are.
That's
So
true.
if you're playing dirty, they'll
They
catch
can
you,
trick, exactly.
basically. But yeah, so basically this exchange in South Korea called CoinPia, which again, I didn't know about this until I read about this article. So none of us use it. But they've decided to shut down that exchange because they're not adhering to the rules in Korean law. So again, it brings to the discussion that now governments are starting to bring their hand compared to 2017, where they're very much let's just have a look, let's be on the sidelines. What is this beast becoming? They're slowly starting to put their hand into certain things. But yeah, I guess we're again 2018. We did say this. The government are going to get more and more involved into the cryptocurrency market.
They have to.
For better or for worse.
I just realised Gemini is called Gemini because it's owned by the twins. Yeah. And in case you guys don't know about astrology, Gemini is basically the split personality twin star or whatever, star sign or whatever, and they're twins. So yeah, there you go. You learn something new every day.
Yep.
But yeah, that's basically the situation with regulations. Next up, Cardano. Okay, so Cardano is a coin that a lot of people got excited about when it got announced, and I can understand that. I was interested by it as well. But it went to new heights and went to prices that I thought was crazy. One, because the product doesn't exist, and it's just that. Basically, it's just that the product doesn't exist, and obviously it's crashed down now and it's struggling to get back up. But that's across the board with cryptocurrencies, I suppose. But Cardano is one where I think it needs to stay at this level because it doesn't make sense for it to be more. And I started looking into Cardano some more, and a few red flags came up. I was surfing the web, just checking, just the state of the cryptocurrency market and stuff, Reddit and all that, and a few things popped up. One is the founder, Charles Hoskins. Hoskins, or whatever his name is kind of not a nice guy. He was kicked out of the Ethereum team because for toxicity or whatever, like basically for being a bit of a prick. And if you see some of his interviews, or like if you see him in like message boards or forums, he's quite abusive to people that just ask him some questions, like slightly tough questions about the product that he's trying to sell to them. He doesn't really take criticism well, and he just seems like a prick, really. But that's not enough to turn you away from a product. Another thing is that the ICO was only available in Japan, and Japan is a very, very crypto friendly country, and because they're very crypto friendly, their regulations and their rules don't, and they want to basically stimulate the growth of cryptocurrency space. They're not as tight, and their choice to only be available in that country seems a bit suspect, because perhaps they knew that if they were available elsewhere, they would be scrutinized for the certain things they were doing or the certain methods they were using. And that's just, and so they decided, let's just do it in Japan because we can get away with a few things. Another red flag is that Charles Hoskins is only going to be with the Cardano team until 2020, and which is just 2 years, which is very, very quick, and that would not give enough time for it to mature after it's released. so how do we like how you can't have a ship without a captain? Basically, it's like building a ship, putting it on the ocean, kicking it off to sea, staying on it for like 2 meters of the journey, then jumping off the ship and saying, "Good luck, guys. Enjoy the trip. I don't know where you're going, but you'll find your way somehow." It doesn't. It doesn't sound. It's not sound, And a lot of the things, and looking at their rhetoric and the way they describe themselves, it just seems like he was kicked out of Ethereum, and then he thought, you know what, let me just go and make something to compete with you. I'm gonna be better than you guys. I'll show you. I'm the best. You guys have a crappy idea. I'm gonna come up with something better. And everyone's kind of fallen for it, and it's because of some of the promises they've made. But it's one thing to get in at a really, really cheap price, and that's fair enough if you got in really, really low and you thought you threw a bit of money on it. But I don't think it's one of those ones where you should be looking to buy if it's over a certain price, or even be putting that much money into it, because it doesn't exist, and people act like it does. That they already act like it's better than Ethereum, but Ethereum has so much built on top of it now. Like literally every ICO is built on Ethereum. It's proved itself, and that's why it's got to where it is now. Same with Bitcoin. Bitcoin's proved itself. All it was peer-to-peer transactions. That's what it's been doing for nearly 10 years now. And
Cardano's a dream of investment.
yeah, basically that's all it is, because we haven't seen it do anything, and people want to talk about it like it's the best thing ever. Yeah, and they don't have a clear philosophy as well. That's one of those things. Like, it kind of ties in what I just said. Whereas it just seems like they're just trying to, everything they're saying is getting at Ethereum. Like, oh, we do this and we do that, and the competition doesn't do this and doesn't do that, and we're gonna have that. And it seems like a really annoyed kid. Also, one of their main one of the things they say they have going for them is being peer reviewed and having a scientific approach. Well, the scientific approach, it being written, a lot of their smart contracts being written in Haskell, that's one thing. That's cool, I suppose, but we haven't seen it in action, so you can't really say anything too much. But the idea is cool. But the peer review stuff is kind of like rubbish, because any white paper worth its salt, any protocol worth its salt is going to get peer reviewed. That's just, if you invent something in the scientific world, it should be peer reviewed, and you should have people come back to you and give you feedback. A lot of ICOs don't have this, which is like obviously well done because they got it, but it's not the greatest thing in the world, because a lot of ICOs don't have this, because a lot of ICOs are rubbish. Like we always say, 95% of these ICOs are just rubbish, but anyone worth its salt is gonna get peer reviewed. Everyone's gonna, if you create something, you're gonna ask for feedback, aren't you, from top people? So yeah, that's those are the red flags that Cardano's raised for me. I had some and I sold it a while back, and it was only a little bit anyway. Even if I was holding now, I wouldn't really care. But it's just one of those ones where I think people shouldn't get too carried away and think it's the best thing ever, because that's how certain people talk about it.
Well, I think that adds into basically it kind of adds into what we were talking about the other day when we were talking about what makes a good white paper. Yeah. Like there's certain things you should look out for. What makes a bad ICO, a bad like white paper when you're looking for it, or even a website. Mm-hmm. There's certain things you should look out for. Again, I guess in terms of Charles Hoskinson, the team, in terms of like the whole philosophy, you can see that on their white paper and even their website. They're just basically saying, "Oh, we're better than Ethereum." Yeah. They're not really talking about the project. They're just talking about how we're better than Ethereum. Yeah. When they have no product. Again, like, I know people are gonna argue, say they have this and they're working on this, but compared to Ethereum, don't say you're better than Ethereum.
Exactly.
Is what I'm saying. Again, like, this Charles Hoskin was the same guy who founded, who caused a hard fork of the Ethereum Classic, which is a completely dead project now. Yeah. People just use it to hedge. Yeah. But I think that goes to show. But that brings me to my next point. Actually, you should be hard on future investments. So be hard on like ICOs or currencies, what you're looking to invest in. Like with a magnifying glass, read that white paper and make sure you find any problems. However, you should be even harder on your current investments. And what I'm saying by that is, the things you are invested in, you should be keeping track of if they're on their roadmap. You should be keeping track with what they're doing. Are they sticking to what they said they're gonna do? Are they have they caused problems? Have they been working hard in terms of the development? Has there been progression? Have they, like, even if they've been going to different different events, like to try get investment, like that's like collaborations with people, that's good. But if they're not doing that stuff, if they're like, there's shitty support on Twitter, for example, like you should be hard on them. Hold no loyalty to these people, because they have your money. They should be loyal to you. So again, like what happened with Cardano and you used to hold it. And again, like I've read the white paper of Cardano. It's so I didn't invest in it personally, but it was solid. It was good, and especially when I read it back when it was I was sort of read it back in October or November, and again, this is when it came out of nowhere and shot into the top 10 ish. I think it was just before then, and I was told, oh, you should have invested. But again, like, I mean, if I was doing a short-term trade to make some money, then cool. But in terms of a long-term investment, nah, not me. But again, remember to be really hard on whatever you're going to invest in, and the things which you're already invested in, because you could catch something slipping on the ICOs you're already invested in, really.
Yeah, Andy's like 100% there. Like, you should be hard on them, especially if they haven't got a product out. Think of it as they're like a employee, and they're a prospect or employee, and they're trying to do an interview with you. They have to answer to you. They want you to invest in them, so they need to prove to you that they are of value. They might not, because it's cryptocurrencies, you're not actually investing in them, but you are, really. You're buying a token or cryptocurrency, and that money will go to them, basically, essentially, or you're using their platform, and they will benefit from it at the end of the day. So they need to prove to you that they are going to provide value to you, and you need to look into that, really. If you actually care about making the right investments and stuff, you need to actually look into it. It's one of those situations where people get quite tribal when it comes to cryptocurrencies. They'll find a cryptocurrency, they like it, and then they back it to the end, no matter what, and they just don't think logically. They
turn into fanboys, right?
Yeah, exactly. They turn to fanboys, and then they just automatically hate anyone who says anything negative about it, hate any competition without looking into it. There's no more rationality, and perhaps there's people listening to this right now that really love Cardano and really think it has a future. But I would suggest just looking into it. You can do whatever you want with your money, with your investments, of course. But I would just say look into it a bit more and, take it in. Perhaps you've seen all this already and you've noticed all this and you think it doesn't matter, it's solid, it's going to go places no matter what, and that's fair enough if that's your assessment. But I just thought it was important to bring this up so you guys can have a look and realize it, because it's always good to have a balance, because if you are in this position where you are kind of tribal, you feel part of the Cardano tribe or feel part of the Ethereum tribe, and you're just reading articles on it every day being posted by the people that work with them, you're only ever going to hear positive news. So you need a voice like ours to tell you the other side of the story to kind of balance it out. Or maybe you haven't heard anything about it and this is the first you're hearing of it. Don't take our word for it. Go out and
do your research.
Exactly, go do your research. Maybe we're wrong. We are human and we are capable of being wrong. But this is just what we've noticed.
Yeah. Again, like, emotion is a big deal. Like, loyalty is something you should hold to nothing in terms of investments. Obviously, if they've been treating you well, I mean, like, I even hold loyalty to some coins who have done it well. But like, if they mess up, then I take my chips out and I don't care.
Yeah.
Like, again, the whole emotion side, being rational and psychology of things is something which is important. It's the difference between you making money and losing money in a lot of cases. Because again, like when the past few weeks, Bitcoin and a lot of the cryptocurrency market has been dropping, people have sold at losses at times because they've got scared and panicked. And I've had people messaging me like saying, "Oh, I had to get out. I had to get out." Like, did you did you? You sold it at the bottom. You bought at the top and you sold at the bottom. Like, did you really? Like, you know what? Like, people really need to actually just be. When they come into this market, especially when it's so volatile, they need to step back and like, am I sure? Am I really gonna do this? Because if they're gonna throw their money on something reckless with dreams that they're gonna be rich, then you're gonna get emotional.
Yeah.
In chat, there's what's his name? Guy Como. You know what I'm talking about? Yeah. He's been doing.
Gio.
Yeah, Gia, yeah, he's been doing videos on psychology.
Yeah, he has,
like we've talked about psychology as well, and I'm someone who loves psychology in terms of as a topic. But yeah, like he's got videos on psychology, which again, shout out to him. Like,
Exactly.
he's bringing out free content. Like,
Exactly.
so maybe some people who do get emotional about this shit should probably
Check it out.
Check it out.
Learn how to control yourselves in these markets. GR is a former pro trader, so he'll add a lot of value. He's got some good videos on his channel as well. Perhaps we'll leave a link to it in the description so you can check it out. But yeah, I think that's everything this week, isn't it?
Yeah, I think so. Yeah.
Yeah. Okay. Cool. Well, we've come to the end. We've had a great podcast. It's been really, really, really good. And there's only one thing that I can think of that made it great, and I think it's obvious to everyone around what it is. There's been a lack of Courtney. Oh, it feels great. There's much more room here.
Yeah.
I can like move my chair about and stuff.
I can spread my legs.
Yeah, I can spread my legs. Courtney taking up so much room with all his big bags and just all his stuff from like his dates. So I don't want to know what's in those bags. Just
the smell of like female perfume.
yeah,
on it.
exactly. Just lipstick all over him. Just get out of here, man. But no, for real. He is actually ill, so get well soon, Courtney.
Yeah, man. Heal up.
Yeah. Yeah, so that's basically it this week. Thanks for listening, guys. Leave a like if you enjoyed it. If you didn't, leave a dislike and let us know why you didn't like it. And let us know why you liked it as well, so we'll just keep doing what you liked. And subscribe if you haven't already. Yeah, see you guys next time.
See you guys next week.